Thank you very much, everybody, for coming to this session on the capital conundrum for platform co-ops. And actually, I think it's, in a way, it's about the capital conundrum for co-ops in general. But there are particular issues in platform co-ops. Can I, first of all, welcome you all to this, and also the panel. I'm going to start by asking the panel to introduce themselves, and I'll start down there with Simon, and then I'll introduce myself at the end. And then we'll crack on with the session. So, Simon.
Hi everyone, thanks for coming. It's this almost, is it penultimate session now? I'm Simon Borkin from Co-operative UK. I'm the program development lead there, but most of my work to date has been on growing the community shares model, so relevant to the idea of accessing capital into co-ops, recognizing that actually there's real value and compatibility in getting equity and socially aligned equity into co-ops that is compatible with the co-op identity. And a lot of that work is we've shown that in the UK with growing a community shares market to over 100 million across 400 community enterprises. Sorry.
Quick introductions. Thank you very much.
I'll use that as well. So I'm Alice Casey from Nesta. I'm head of new operating models at Nesta. What that basically means is we fund and support research and also projects that find new ways of meeting social needs. If you want to look up some current work, look up Share Lab Fund. We have a call open in Scotland at the minute for startups in Scotland.
Hi, my name is Maru Bautista, and I'm the Director of Cooperative Development at the Center for Family Life in Brooklyn, New York, and we coordinate Up and Go, the online platform that provides cleaning services through worker cooperatives.
Hi, everyone. Welcome. My name is Danny Spitzberg. I'm a tech strategist with CoLab, which is a tech cooperative. We build apps and websites, and increasingly more focused on cooperative platforms. And one of the projects, for example, is Up and Go that we've worked with. I think I'll just be as simple as that.
Okay. Hello. Does this one working? Yeah. Yes. I'm Vivian Woodell, formerly of the Phone Co-op, and also a board member of the Mid-Counties Co-op, which owns Co-op Energy. And what I'm working on now is what you might call strategic co-op development. I'm working at the Phone Co-op Foundation for Co-operative Innovation. And one of the key areas that we are looking at is this question of capital and how we can structure risk capital to enable things like platform co-ops and other riskier new start businesses to grow and thrive. Okay, so what I'm going to do, just to briefly set out how the session's going to work, I'm going to do a short introduction to try and frame the questions and the issues. By all means, by the way, if you think I've framed it wrong, it's an interactive session, so say so. But what we'll then do is break at a certain point. People from the panel may want to throw some other things in at that point. It's completely open, and then we'll break into little groups. So we'll ask you to form little groups for half an hour and actually try and talk about some of these issues. So what we want to do is to really draw some ideas. There's a lot of expertise in the room, a lot of people who've done lots of things in this area in the room, have thought about it, and to get some of those ideas fed back. And then we'll have a session then for the last half an hour or so. We will have a discussion, an open discussion, throwing in your ideas and bouncing them off the panel and back. But what we're also going to ask you to do, if you want to feed your ideas in, I'm going to collate them and try and put those into a document that begins to summarize some of the thoughts in this area and will be circulated back to anyone who fed them to me. So my email address will be up on there at the end, and you'll be able to see where to send it if you want to do that. So it's open to you to do that. So okay, I'm going to start off by talking about two stories. I'll stand up if you like. Two stories which I think are relevant to this question of the capital conundrum. They both relate to capital. One, you could say, was a success and one wasn't a success. One of them's a co-op and one's a social enterprise. So talking about the successful one first, Fairphone. Though many of you, I'm sure, will be aware of Fairphone. And they produced this ethical smartphone, the world's first ethical smartphone. How did they get started? And you know, they didn't have any capital really. They had very little capital. And what they did was they got 25,000 people to pay in advance for a phone that had never been built before by an organization that had never built a phone before. And that was an act of faith by those people. Those people wanted something to happen, and they were able to combine their money. So it's a different kind of crowdfunding. It wasn't equity crowdfunding. They didn't have to go through regulatory processes. They simply got people to put their money where their mouth was, enough to raise. They raised 8 million euros by doing that, and they were able to produce the first batch of phones and turn a profit of 1.8 million euros, which helped them do the second batch. But you know, that is making capital work for a social purpose in a very direct way. Now, the second story is a worker co-op called Poptel. Some of you may be old enough to remember Poptel, which was a very interesting worker co-op that lasted for quite a long time, set up by a group of people who did electronics engineering at Sussex University in the 70s. And they wanted to use their skills for a social purpose. And they set up, before the internet, they had a lot of vision, these people. You know, they set before the internet, email and bulletin board and information exchange services for NGOs, social change organizations, trade unions, human rights organizations all over the world. And it wasn't a money spinner, but it was successful at doing what it was set up for, and it paid their wages. But when the internet really took off, they realized this business model wouldn't work anymore, because the way they were charging for it wasn't going to work. People in Indonesia were not going to pay an organization in the UK to send emails. It just wasn't going to happen. So they said, okay, we need to develop new business models, and we need to raise some capital to make that happen. And they couldn't raise any capital from co-op finance. I think they said no, you know, and there were quite a few other people who said, so they in the end, they decided to sell a quarter of the business to somebody who said they understood co-ops, and they thought that, well, they still had 3/4, so they'd have control. It didn't work out like that, and they suddenly then realized the opportunity to start .coop. All of you using .coop domains, they actually were there at the beginning. And, but, you know, US lawyers and so forth that were needed to get through, it cost a lot of money, and they burned through many millions, and they had more investment, and eventually they were taken over by the investor. And actually it didn't work. The investor thought they could control it, but actually all the customers and the staff started leaving. So the phone co-op went and took over their retail business for £1. Mid Counties co-op went and bought the .coop bit for rather a lot more than that, and eventually ended up giving it to the ICA for nothing. And another bit hived off into a worker co-op. But actually, it was a failure as far as the capital is concerned, and it shows the fundamental problem that we face. So I'm just going to run you through a few slides to try and frame the question. So I think if we look back at the history of co-ops, you know, actually, this is not a new problem. In the 19th century, when co-ops got started, they didn't focus on high-risk areas. The equivalent in the 19th century of today's tech industry were railways. You know, lots of people set up railways on a very speculative basis, and they failed. What they did was they stuck to safe things, relatively safe things like food retailing, and some manufacturing that was a little bit riskier. And I think we see similar problems today. And I think that one of the key issues is that our competitors, our capitalist competitors, do certain things that we can't easily do because they're not really compatible with our values or principles. First of all, they take huge risks in the hope of huge rewards. You know, the 1 in 100 succeeds type of approach. And then the one that succeeds big, and you get very rich. That's not really how co-ops work. We're not trying to get very rich, make a small number of people very rich. Secondly, they fund in stages, matching different risk appetites to the investments that take place at each stage. So it's typically high risk at the start, and then gradually it becomes lower risk as you move through from angel to VC to private equity, and eventually to an IPO, for example. And also, early on, and actually not just early on, but for quite a long time, the investors don't expect dividends. They're not expecting a flow of profits. I mean, Amazon lost money for a decade. They had people who were prepared to continue pouring money into it for a decade. And actually, that's very hard for us to do in co-ops. So what they're looking for is a sale of the business, it's exit. And that is something that fundamentally we can't do as co-ops, because if you sell the co-op, it's not a co-op anymore. You've sold it to someone else. Interestingly, though, some analysis suggests that the returns that these venture capital investors are making are not actually that high on average. They're all hoping to be the ones that make it big, but across the piece, they're not all making it big. And we don't have comparable mechanisms to share risk and convert future profits into current value. Now, a related problem, and it's kind of related because it's what people are aiming for, is this question of monopoly. These Amazon, their funders were prepared to keep pouring money into it for 10 years in order to get them into the position of being the one that you have to go to, and to occupy that monopoly position, more or less a monopoly. They would probably argue with me about whether they're a monopoly, but the reality is they're a quasi-monopoly. And the aim in the online e-commerce sector is to become the sole platform that really dominates and make everyone else, if you like, marginal, force people to become niche players or give up. And in the past, governments used to break up these massive kind of enterprises. If you look at what happened in the United States with telecoms businesses in the mid-20th century, they forced the breakup of those kind of things. But nowadays, because these are so transnational, governments struggle to do that. And so what do we do? And I think the question is, if we're really serious about creating alternatives to these kinds of behemoths, we either need to find a way to match or replicate these capabilities that doesn't cut across our cooperative values, or we need to do something else that's just as effective. Now, I think we've got a few things going for us. And it's an interesting question, how important are these things? Are they enough? So one is, we might be less risky. I mean, we're a bit closer to our markets. We tend to come bottom up from people who already have needs that the co-op is there to meet. Secondly, we already have a culture of cooperation through, for example, open source working and culture, which perhaps means that we're willing to put a certain amount of value down before demanding to be paid. There might be less moral hazard. Now that would be, in the tech world, if 1 in 100 succeeds, it's quite acceptable to be one of the 99, and you can do that all your life and be paid very handsomely for it, and no one will say you were a failure, even if you were a serial bankrupt, running a lot of bankrupt businesses. We might not look at it like that. I think in the co-op world, people wouldn't be coming into it thinking, well, I'll just get paid to do something I know is going to fail. You might actually hope that people would have more integrity than that. And I think we're also very innovative in the co-op sector, which perhaps is also beneficial to us. And maybe there'll be the possibility that there'll be some kind of support from the state, because there are some state actors that actually want to see this kind of thing succeed. So now I'm going to hand it over to you. I'd like to ask you to form groups of 2 or 3, however many you want, frankly. It's up to you. Whatever you think will work. And think about some solutions to this. Think about what we might be able to do. And I think there are just a few questions here that might ask you to challenge, help you to kick that discussion off. So first of all, the fundamental question is, do we really want to do this? Are we trying to, do we have that ambition to supplant these e-commerce behemoths with co-ops? Is that what we want to do? Or is it just something we talk about? So I think that's a challenge. Are there mechanisms that we could devise which would enable us to crystallize future value which don't compromise co-op principles? And is it just a question of investors being less greedy, or is that oversimplifying it? And what is the role of the state? But those are only just some of the questions. There are plenty of other questions that I'm sure you will come up with yourselves. We're going to give this 30 minutes. So let's just say at 4:15, or just under 30 minutes. 4:15, we'll come back and bounce the questions off the panel. Is there anyone on the panel who wants to say anything at this stage? Yes, Alice?
Just a quick thing, which is around who's setting the rules of the game, which I think might be helpful for people to discuss, because it's the people who got there first who seem to be setting the paradigm that we're operating in, which is one of feeling like you have to go up against what's there, head to head. But I just would encourage people when they're thinking about strategies to sort of think about what are the strengths of co-ops and what are the strengths of decentralized platform technologies, and play into those strengths and think about that. So that's my 2 pence.
Thank you. I think that's very helpful. Okay. Anyone else? No? Yes?
Okay.
This is a better one.
Yeah, right. Sorry, that was awkward. And also, I would challenge ourselves to think about, in these strategies and these mechanisms, and what we see is how do we make the capital, the question about capital accessible, and with thinking about redistribution of capital and wealth so that it doesn't replicate what is happening now, where a lot of communities are just left out of the economy. So just something about like accessibility and equity, like think about that in your conversations.
That's great. So what sort of capital do we actually want and what impacts? Yes.
And this is the question to the room, just to get a sense. Do people feel like they need more clarification before they launch into these small groups, or do people feel like they have something to go on?
You have to frame it as yes and no.
I'm looking just for expressions, actually.
You only get blank expressions.
Yeah, yeah. All right, super. Yeah.
Looks like you're happy.
All right, cheers.
Okay.
Okay.
Look, what we're going to do as well, the panel members are going to wander around and interact with you as well. So, you can ask questions, we can throw ideas in, it can be quite interactive that way. Shall we break up into groups and do that now?
It's been going since 1934. It's made transactions in Swiss francs. They are in Swiss francs. It's not very established. And in fact, just makes you talk about it. It's surprising. I mean, that does make sense. That does make sense.
It's an interactive discussion involving the panel and everybody in the room. So I think you were each asked to come back with 2 key thoughts. So who'd like to start? Well, that's a stunning. There you go, Mark. Thank you.
So we sort of used the example of how would we create something that could outcompete Uber. And we got quite excited about the idea of an initial coin offering that maybe could be not that much different from the sort of community share offers we'd have, but there would be a blend of equity, but also tradable tokens that could be then used. So if I invested in FareCab or whatever, I would actually be purchasing future journeys as tokens, but also equity in the organization as well. And then the challenges around that would be how do you then still, if Uber is still undercutting you, how do you compete with that? And also what would be so in the UK there's interesting and exciting tax reliefs that we can use to incentivize equity offers. How do they relate to if we're using tokens rather than pound coins?
So that's taking a little bit from what Fairphone did and translating that into a co-op startup by getting people to buy things in advance.
Yes.
Great idea. Thank you. Who else would add something to that?
This one at the front. Yeah.
Okay, the music stopped on me. Yep. So the first thing we were talking about was a sort of collective aversion to VC capital, and also the idea of not wanting to replicate what the platform monopolies are currently doing, and therefore, like the idea of degrowth came up as in terms of like you're not wanting to outcompete and outconsume and out kind of sell in the way that platform monopolies are. So a different model in that sense. And then the other thing that came out towards the end was when somebody mentioned the word movement. And actually, that's kind of what, in a way, we're looking for is something that moves people to want to use cooperatives or other models as their kind of primary way of operating. And it's very, very hard to do that. So there's a lot of reasons for that. It's not easy. It's not easy to find what currently exists. But also, as a movement, it's not accessible enough. So an event like this is not something where the general population can come and find out about what's happening cooperatively in their area. So you could decentralize something like this. You can make it so that people in other fields and in other areas of life are able to find out what is happening within the cooperative movement. So that actually starts to create the new narrative, and it makes explicit that narrative that is an explicit alternative that when people find out about it, they can start to use it, they can start to tell their friends about it. And the point was made that there are more people employed in co-ops than there are in multinationals. So actually, it's all there, but it's just not visible to people.
So that strikes me as a very important point, although it's tangential to the capital question, maybe linked to it, though.
Well, it makes makes the capital less of an issue if people are able to, if it's kind of creating more of a market in a way. If you're talking in capital terms, it's creating a market, and if you create a market, then you create more money. Don't you?
And I'm interested in your first point, and I'd be interested to know if any of the members of the panel have any thoughts on this. You talked about degrowth, or not trying to compete with these big operators. Does that mean we're content to stay small? And what are the implications of that, if that is the case? And what do the panel think about that?
Well, I was telling a story about a hedge fund manager who has an algorithmic automated hedge fund that returns 14% over the stock market, and the minimum investment is $10 million. So if you think about that type of relationship to money, you know, co-ops cannot compete with that type of like a super aggressive relationship to money. So saying that we should actually stop accepting that type of currency, not like stop using it for getting things that we want, stop accepting it in exchange for things that they want, create value and return value back to the system that created the value, instead of letting it be locked away and hoarded and not used to meet needs.
Thank you. Any thoughts from the panel on that?
I think on the scale point, I think, well, it's something that's come up quite a bit, but the idea that actually we know that there are sort of emerging local capital markets, so recognizing that people have, you know, a lot of their identity and association of wanting to use their capital in a socially motivated way often emerges from where they live and work, and that's what's kind of fueled a lot of the community shares market, and potentially that's what you would try and realize around sort of potentially non-sort of physical assets, but looking at sort of technology-led solutions. But you could use federated, decentralized solutions to basically get local applications working together. So, you know, whether that is transport, energy, other forms of services. So I think there's probably something around decentralization, federated structures, and lowering the capital intensiveness of starting that can be put together. It's just working out how they all layer, which I'm still struggling with.
Thank you. There's someone over here who wants to speak. I don't know if you could grab the microphone, whiz it over to them.
Just to say that in the UK at least, and probably around the world, there's more of a move back to place-shaping industrial strategies. So the idea of building on local strengths and trying to make the most of them. There's currently a call out for the Strength in Places Fund here in the UK, which is about putting money into increasing the productivity of particular clusters within particular places that are behind the average of the UK. So if we can imagine trying to funnel industrial strategy money into making clusters of cooperatives that support particular places moving forward in their own economic dynamism, that would be a new source of capital. It would be a great use of cooperatives as clusters that support each other, and it would also avoid trying to compete with the digital giants where they're great, which is where you can get to a monopoly quicker by having capital.
So I'd like to challenge that back in a way, I mean this whole discussion a little bit, because some of these new platforms are releasing true mutual value. You know, the fact that you've got a spare room in your house and somebody else needs a room in a city, and Airbnb makes that happen. It joins up individuals and releases the value for them. And that's a very mutual thing that would be a natural thing for a co-op to do. And are we really saying, well, that's something that, you know, big private capital can do that we can't do? Surely we could do that. Surely that's exactly the sort of thing that a co-op should be able to do and should become famous for doing. And it's not a hedge fund. You know, we're not talking about a hedge fund or some kind of aggressive capital here. We're talking about something very practical and down to earth of sharing of rooms in a house. What do people think about that?
Yeah, hi. Yeah, we were very much talking on this subject of, it's not just, what you're talking about is, or we've been talking about, is a return in money. But you can't live in money, you can't heat yourself with money, you can't eat money. It actually is a means to get what you do need. And we were talking about value, and value in forms other than money, which is just a claim over value. So when you start thinking about money's worth, about useful things, you know, and not just useful things, but valuable things like care and creativity, you know, how do you actually mobilize these resources? Because shareholders don't share. Landlords don't share. Banks don't share. We need agreements. Risk sharing, cost sharing, you know, data sharing and surplus sharing agreements. Yes. These are not new, Vivian. They've always been around, but they've been forgotten. And I think what we need to do is mobilize using these new generations of agreements.
We need to keep our contribution short. And this person next to you wants to say something.
Yeah, sorry I missed the first part of this, but I just wanted to respond to what you said about the Airbnb. I never used it before, but my husband insisted we had to go on holiday. He didn't know anybody lived there, so I've used Airbnb once. Now, the first business in isn't always the one that survives. They actually show how to do it. Other people can do something similar. And they're taking quite a rake off.
They are.
I don't see why you couldn't do it, you know, town by town, or, you know, co-ops, people who work in co-ops in a certain area link together and say, let's do an accommodation thing as well. Lots of people have got, you know, a spare bedroom or could be motivated to do it up, you know, to tidy up their attic room. And we haven't, in this conference, we haven't even got to something fairly obvious, which is not yet, which is connecting up co-ops into a mutual exchange. That's obvious. And we haven't even got to putting everybody here on a platform where we can see who each other are afterwards. So these things are yet to be done.
Thank you. I think those are valid points. I think key issues are critical mass and common standards. Lots and lots of hands up here. Now, I've just been reminded by Danny that he asked you to give two things. Do you want to just remind people what they were?
Oh, yeah, from your group, and I am happy to let chaos reign, but the idea was to have, from your discussion, something that felt promising to share with the room, and some challenge about it, so we have a little criticism built in.
Something promising and a challenge. Okay, who wants to throw that in? The microphone. John Atherton, I think, is waving.
So the good thing is the mass membership of decentralisation and all that sort of stuff which we've been talking about. The challenge is how do you do that decentralisation with brand? You can get an Uber in Tokyo or London. How can you get a co-op thing so ubiquitously?
Brilliantly put. That was very succinctly put. Let's have lots of succinct thoughts in the last 7 minutes.
So the good thing is there is an incredible amount of savings and citizens' capital doing nothing that can be mobilized, amongst other things, through tax relief schemes and things like that. So we are not poor. It is often the countries or the governments are poor and the citizens in the countries are rich. In Flanders alone, the savings of the people are larger than the whole state debt. Yeah. Just to say, the liability or the challenge here is that traditional savers, people who save money, who come, so the venture capitalists or the double-digit ROI people, they don't come to Coops. Actually, by law in Belgium, you can't pay out more than 6% dividend. So, but vice versa, a 6% dividend is very promising to citizens' capital. Although we had a scandal because the people bought shares in a co-op believing that it was guaranteed in terms of, it was kind of a savings. It was not a risk-bearing share.
I think we probably shouldn't go into a lot of detail on one example, but that's very helpful. I think the thing you've put there about double-digit on the one hand and the return being acceptable. The key thing, though, is whether people will pay out cash early on or late on, because our competitors don't pay out cash for years and years. But I think it's a very good point. And who else has got 2 points to make? Here at the front, and then at the back there. Keeping you running around there.
These internet software models are winner-take-all models, and each vertical will have a sort of 80% plus dominance. Uber is funded to the tune of $5 billion a year by the finance industry in terms of being able to sustain itself at an otherwise loss.
That's absolutely right.
So rich people are controlling this new device for the trickle up of money to the rich, and they will not be funding co-ops with a 6% return that give power to the poor. So the only way around it is, I think, is just, I mean, there are obviously multiple angles you can take, but I think education is where you start, because I think in schools, kids have no concept of what a business is, how it works, what a co-op is or how it works. They're all about fairness. They know what fairness is, but they get that drilled out of them by the time they're 18. So, and then they're forced to be unfair to each other and to compete. So I think that's the challenge.
So
get education.
So the challenge so what you've said is we can't do it, and the challenge is we have to educate another generation to do it instead. Can we have there was somebody at the back with her hand up to get the microphone. Right at the back there. Just looking away from you now.
We said what was promising was some locally rooted co-ops and the power of co-ops to share, or at least the principle that co-ops should fund, buy from, and share between co-ops. I'm about to move into a housing co-op, and they've got a whole lot of surplus, and they're trying to decide how to invest it. If there was a kind of agreement or infrastructure for co-ops like housing, childcare, energy co-ops that do create surplus to put into a local pot and for that to be reinvested and redistributed locally, you keep the funds, the wealth beyond just money, the connections, the time, the value local, and you have a thriving co-op-driven economy.
You to some.
Okay.
Okay.
And then.
So I guess one challenge that I'm understanding is there's this tendency that I feel like I keep hearing name towards centralization of information. If we just had this one system that I could find all the answers in, and that just sounds weird to me. I don't understand that as a coordination problem. And so I wonder, like, I guess the challenge is how do we make co-ops or enable our practices to have the agency so that we can actually just make the decisions that we need to make without having some like mass level of centralized coordination of all the co-ops in the world doing all the things together, is my first challenge. And then the second challenge is how do we get people that don't look like us to actually give a fuck? If you look around the room, this doesn't look like London at all.
Somebody said they'd have a hand up for an awfully long time and was getting very frustrated, so we're better give that person.
Thank you. We've met Vivian when we did. We came out of the Unfounder Accelerator program for platform co-ops, and this particular problem, finding seed funding and growth funding specifically for digital platforms, was one of the issues that we looked at. The culmination of that was some crowdfunding. So we raised tens of thousands in in-kind support and money for a thing called Funding Spark to look at this particular problem, and we've looked in some detail. I'll try not to speak at too much length now, but setting up a charitable foundation as an investment management company and that kind of surplus that you mentioned, in terms of coming from other co-ops and houses, how can that go in to support other enterprises? Specifically, there are very tax-efficient wrappers like SEIS and EIS, where that would traditionally be invested in startup businesses. So if anyone's got any capital gains, anyone had any capital gains you could have invested. If you have some now, if you have some in future, that's a good place to put them. I've got some. We've already got a second investor already from this conference. There are crowdfunding platforms like ETHX that could support that. Ultimately, what we want to do is tap into patient capital that is happy with a 5% return. So Norway's Sovereign Wealth Fund is the largest in the world, has $1 trillion to invest, and is happy with 4% return on capital. The minimum investment for those pensions, and we've talked to some of them are government pensions, is 20 million. So that kind of money is going to be great in 2 or 3 years' time when some of these businesses are more mature and need that kind of money for growth. But for the time being, we've got to support that sort of seed funding, which I've been talking to some of the guys in the group from VME. They've got a shares trading platform with durable share capital, and we can produce some tax-efficient wrappers and individually invest put our money where our mouth is. So. I've drawn out a model. If anyone wants to talk about it later, that'd be great. Thank you very much.
Very helpful. Right, now we got just a few minutes left. Thank you for all these contributions. I think I'll take one more from Rory there, who I know spends a lot of his life thinking about these things, and then I'm going to ask the panel if they have any reflections before we round up.
Yeah, it's just to reflect, I think, some of the key points in the group. We began to talk about, the old system of cooperative capital with member subscriptions tends to be underused. And then the counterpoint to that is the new forms of digital fundraising and digital currencies. We were just beginning to get into a conversation about the opportunities for digital currencies. And just one example where you might pay out your profits in a digital currency rather than cash, so you can remain cash rich. And the digital currency can be used for further transactions within the co-op, would again be another way of making your capital work better. So we could reinvent or revisit some old thinking about getting
just
subscription
to be clear, are you talking
capital.
about issuing a new currency to do this?
Yes, so having your own digital currency that you use within the co-op movement.
Just within the movement as a whole, so that's what you're talking about, rather than each co-op issuing their own, which sounds
well, the examples I'm thinking of, the co-op is creating its own currency, but I don't see why you couldn't have a currency that was in wider use across the co-op movement as well.
Okay, are there any burning points that people want to make before we go, start to wrap up and ask for any final thoughts from the panel? No? Oh, yes, one more from Graham here. Okay.
I'm aware that Share Tribe and also Open Collective are two organisations that are sort of parallel to the cooperative movement, although not in it, and supportive, I think, broadly supportive. They've both raised money from an organisation called Purpose Capital, which is not taking an equity stake in the businesses that it invests in. So that there is innovation.
Is it debt or is it a gift?
Sorry?
Is it debt or is it a gift?
Well, they're looking for a return, but it's patient money, I think. So it's a monible, a small return that they're looking for. It's at 5%.
Okay, thank you. Thank you very much, everybody. It's been brilliant. Simon, do you want to kick off or you've got any thoughts? If you don't, then hand the microphone on to Alice.
Just quickly, I think, it's been really useful to get a lot of responses back, and I think one of the things that's come out is that in a big step change in how technology has kind of changed how we live and work is because it moved into the bricks and mortar economy, and I feel that is where just naturally people have a stronger identity and an association, and it's more locally rooted because it's things that people can see and touch and feel. So for me, that's what potentially opens up the opportunity for retail investment, so citizen investment, and then it's just finding the means to attract that. So I think we've got a lot of levers, whether that's tax relief, whether it's using the legislation, society law, using the, I suppose, social investment landscape that is in the UK, so quite UK-centric, but possibly helpful.
Alice, any thoughts?
So I think there's one overarching thing, which is the speed at which things are moving, because we're thinking about technology here, and the financial systems that we've got available are not fast enough, they're not ambitious enough, and I think the ambition levels need to go up on both the supply and the demand side of finance. And so by that I mean the kind of organisations that we need to see in platform co-ops. A lot of what we talked about at this conference is so early stage. We need to see that quality venture appearing, which is, the platform co-op, that people have some real examples, what you might call in the private sector unicorns. We want to see those future ambitious projects appearing and being supported. So the supply needs to happen. And then in terms of the funding that's available, there is a way to sort of think about the journey of these organisations. So we've got lots of small grant type funds that are available, and that needs to happen. It needs to be more applicable to the mutuals sort of space, which is currently not always. And the main problem that I see is that we have this gap, of about maybe 500,000 to £3 million ish, which is where every venture goes to sort of fall over and die. And that's where we need to see more different kinds of investment of the sort of thing that has been mentioned today, around patient capital, different sorts of finance, and that's where the innovation has to happen.
Thank you. Mary?
I think, it's been very useful for me to hear everything. And the question that I come out of this with is, what do we do? you know, and I think that even though I don't think that we necessarily want to have one central entity that is like managing everything. I don't think that that's gonna ever work. But I do think that we need more collaboration and more sharing of like what are we doing in our own context to advance the work that we're doing, and what are the lessons that we can keep learning from each other. So those are just like the let's keep talking and let's keep learning from each other kind of thing.
Well, I think what we do is more or less where we started, and I'll hand over to Danny to give his final thoughts, if you have any.
To any of the others.
He doesn't want to have any of it. Okay, well, look, that's been absolutely brilliant. If you have thoughts you want to send in, send them to this address, vivian@innovate.coop. I will send back to anybody who sends to me a summary, and I hope we can pull something together from whatever's been filmed as well. And if that's available, we can make it available on video, we will. But thank you very much for everybody. It's been absolutely great. Oh.
You can access the notes at open.coop/2018-notes. I took notes on what everybody has said already.
Thank you very much. That's brilliant.
Open.coop/2018-notes.
That is fantastic. Thank you very much. Thank you to all of you.